There's a new earnings methodology here at Zacks. It's proprietary. We want you to know more about it. And here to help us understand it better is our research director, Shiraz Mian. Shiraz, what's it all about? It's called Zacks Earnings ESP, right?
That's right. And ESP is, I have this chart for you, Terry. It's expected surprise prediction.
Okay.
That's what the ESP stands for. And the idea behind this, this proprietary metric is to give you an edge, you, the investor, to find out ahead of time which companies would come out with positive earnings surprises. So we are a data shop. Our core strength has always been in earnings numbers, actuals, as well as estimates. We have a very good way of knowing, having seen every analyst's estimates quarter after quarter as to who has the high level of accuracy. So the ESP is at its core basically the difference between the most accurate estimate within the Zacks consensus and then the Zacks consensus estimate. Expected surprise prediction. The idea is to give you an edge in foretelling a positive surprise. And as I mentioned there, it's analogous to the whisper number that everybody talks about at the time of earnings releases.
Okay. Why should investors actually care about this data point?
Well, it's a very useful it's a very useful number. For the primary reason that knowing which companies would surprise to the upside has a very strong correlation with which companies would produce positive returns.
I see.
So the ESP number, particularly when you combine it with Zacks rank, improves significantly your odds of finding which companies would positively surprise. And as I mentioned on the slide, if you combine stocks with positive ESPs with the Zacks rank, particularly Zacks rank of 3 or better, meaning Zacks rank of 3, which is a neutral rating, and 2 and 1, which are buy and strong buy. So stocks with positive ESPs and a rank of 1, 2, or 3, what we see in our research that there is a 70% likelihood that the company would come out with a positive surprise. So extremely useful to know ahead of time on the stocks, whether you're looking at them to purchase them or the ones in your portfolio already, to know where their ESP is.
Okay, so along those same lines, can you share any performance with us?
Yes, absolutely. And I have this slide which gives the performance. What I don't have on the slide is that just having positive ESP improves your odds of outperformance. In fact, our data shows that over the 10-year back-tested data, stocks with positive ESPs had a 23.5% positive return versus stocks with negative ESPs that had a negative 9.2% return. When you combine that with the Zacks rank, as we do over there, your performance increases to 28.3%. So just positive ESP combined with a Zacks rank of 1, 2, or 3 significantly improves your odds of outperforming the market. Now, not all positive ESPs are equal. Just barely positive gives you 28.3%. When you increase it to more than 1% positive, that's 29.6%. Increase it to more than 2%, that's 31.6%. More than 3% is 37.2%. So but folks shouldn't keep looking for higher and higher ESP numbers. What our analysis shows is that there is a significant drop-off in the performance. There is no additional benefit to having positive ESPs beyond 3%.
I see.
So look for positive ESPs in combination with Zacks rank of 1, 2, or 3, up to 3%, but there is no added benefit to having more positive bigger positive numbers beyond 3%.
So that's one situation where the ESP is not useful.
No, the positive ESP at any level is useful. Where it's not useful are a couple of circumstances, the most important being in telling you about negative surprises.
I see.
So the ESP is just barely better than a coin toss in telling you about which companies will miss estimates. In fact, what our research shows is that stocks with a ZAX rank of 4 and 5 and with any ESP, the predictive value of the metric drops significantly. So it's a useful metric when combined with ZAX rank in telling you about positive surprises, but it's not so useful in telling you about which companies would miss estimates.
All right, interesting. Thanks for the information on this new methodology. Hopefully that helps you understand the ZAX earnings ESP just a little bit better. With Shiraz, I'm Terry Ruffalo.